What is it about the intelligent investor? Let's say we're talking to a 7-year-old kid. Is there a way to boil down just like the most core part of that book to try to relay what's so profound about the book?
So this is perfect. I have a 10-year-old, a 7-year-old, and a 3-year-old. So I'm glad you picked the 7-year-old to talk to this through, because the 3-year-old wouldn't understand. The 11-year-old would just whatever, Dad. So the way I would explain it to a 7-year-old would be find out what something is worth and buy underneath that. Buy something for cheaper than what you think it's worth. That's how I would boil down not only the intelligent investor, but actually all of value investing. Figure out what something is valued at, buy underneath that price.
Yeah, it's pretty simple. Can you give some examples of maybe how you started thinking about that?
Yes. So I went the normal stock route like everybody does. Got kicked in the teeth by Mr. Market because when I first started investing, because I, at that point, wasn't super into actually learning about value investing and the craft of it. I was investing in quote unquote stocks with good looking ratios. Don't do that. If you're listening or watching, don't do that. What happened is 6 months after I started investing real money this time, I lost 50% of my entire portfolio when the Chinese small caps blew up. This was probably 8, 9, 10 years ago, something like that. When the Chinese small caps blew up because they found out a lot more frauds and reverse mergers and all that. So I got crushed because all of the stocks with good looking ratios were those Chinese small caps. So what kind of kickstarted me from there, I was like, I need to dedicate myself to this, or I need to do something else because I'm just going to lose money. So that's kind of what transitioned me from the investor or the person playing into an actual investor. And I was investing small amounts of money then, but the actual first real world example I have of true value investing is a business I started to buy clothes from thrift stores like Goodwill, Salvation Army, stuff like that for, let's say, $4, and then sell them for $20, $25 on eBay. That was my first kind of real world business experience with value investing. Was not stocks, although Mr. Market kicking me in the teeth hurt. It was actually buying and selling clothes on eBay.
So was there parts of that? Because I'm sure you're not just going into a thrift store and buying every little thing that you can do. So were there strategies you used for that maybe also are used in value investing for stocks?
Oh yeah, no, that's a very good question. I've never been asked that question before. Yes, absolutely. So one example is I would look for competitive advantages. How would I look for that in a pair of jeans, for example? One example of that is a brand name, powerful brand name. One Salvation Army at the time I was living in South Dakota, I found a pair of what looked like brand new Giorgio Armani pants at a thrift store for $2. Looked online, did the research, all that, of course, which is a huge thing in value investing. You have to do the research. You actually have to know what to look for to be able to spot it if it's a good deal. So I did my research before that, found these pants, and did the research on eBay to see what they're worth on the store. And I ended up selling them for $80. So I turned $2 into $80 with the similar value investing principles. There are other things, again, if you want to go real deep into this, what's coming to the top of my head right now is balance sheet strength. They looked like a brand new pair of pants, so they had a clean balance sheet, if you want to put it that way. And there was some other stuff too, but I don't know if you guys want to keep going down that rabbit hole, because that's a fascinating question that you asked.
Let's try one more hop down the rabbit hole. Let's see.
One more hop down the rabbit hole. So to avoid terrible stocks, or in this case, clothes, can't have holes in them, can't have stains, can't have problems with them, can't have major red flags. So that's another example of using value investing principles to buy and sell clothes to make money.
Love it.
Yeah, that's awesome.
Okay, so let's go back. So you started this business, and then was there a part in time when you were in business that you kind of went back to the stock market?
Yes. So I built that business from zero, like literally whatever money, because at that time we didn't have any money. Literally whatever money I had, and it was probably a couple $100 at most. I turned that couple $100 or whatever it was into an inventory worth $20,000. And I stopped doing that for several reasons. First, my wife hated all the inventory in our house. because at that stage, it was all in my house and we didn't have where to put it. So she was getting frustrated with me. But the more important thing is why I stopped that and got back into stocks is because I realized, and I don't remember the exact Buffett quote about this, but I realized that all of my cash was in inventory, and that to keep the business growing, I would keep having to do that, which means I couldn't pay myself. So because you have to constantly, in this kind of business, you have to constantly keep reinvesting the money into more and more inventory to continue growing it. So I couldn't get the cash out. When I realized that, I sold off the inventory. Actually, I think we ended up moving not too long. So I sold off as much as I could, and then we donated the rest of it back to Goodwill and Salvation Army. Because there's no way I could have got my cash out of it while still growing the business. Now looking back, if I would have known what I'd known now, I would have probably hired somebody to help me or found a storage unit to do that. But that transition is what got me back into kind of looking at the stocks kind of full time.
So do you feel like the experience from running that business really helped kind of lay the groundwork for value investing and kind of taking it from there?
Oh yeah, absolutely. Another of my favorite sayings that frankly I used to think was crap, now I realize is 100% true. I'm a better businessman because I'm an investor, and I'm a better investor because I'm a businessman. Again, I used to think that was crap. That is 1,000,000% true, because the more you are in real world business situations, the more you have to think things like, do I have enough margin of safety? Is there too much risk here? Am I comfortable with the risk? Is this worth my time? Is this worth the opportunity cost? All these things that you think about as a value investor looking at a stock, you have to think as a business owner as well, and kind of vice versa. And so doing both combined has helped. I'm positive it's helped both aspects of my career.